There is a lot for our clients to absorb: sharp movements in financial markets, a lot of uncertainty over the economic environment. Two key themes, really. The first has been the energy crisis that was initially focused in Europe, but we increasingly all hearing about the shortages of electricity in China and even in India. Those energy shortages obviously creating energy price increases. That's inflationary for the world. And we're even hearing increasing talk of a stagflation environment, so a world where inflation is high but economic growth is low. And those concerns feeding through into the markets. It's not all bad from a South African perspective. As gas prices have risen, then we saw oil prices rise, but we've also seen a substantial, and by substantial I mean a 200-300% increase in the coal price. And of course, South Africa is a major coal exporter. So South Africa is getting another boost, another leg to this upside in commodity prices that have done so well for us this year. The second theme is around the Fed. If we go back to the September Fed meeting, Chairman Powell made it clear that the Fed is on track to go ahead and taper its asset purchase program. In other words, slow down the amount of bonds it's buying, Powell making it clear that it's all but certain that the Fed will announce a taper at the November 3 meeting. All but certain. What's happened on Friday, we had a very weak US non-farm payroll figure. It's a very slow job creation in the US. Only 190,000 jobs created in the month of September, as against the 500,000 jobs that were expected. So it's a low figure, well below expectations, suggesting growth isn't all that strong. This creates huge uncertainty now suddenly about whether the Fed is going to go ahead and taper, and that's going to reverberate in financial markets. Since the Fed meeting, we've seen a generalized risk-off environment. So the Rand coming under pressure, equities under some pressure. Suddenly now the cat amongst the pigeons with a weak payroll print. Is the Fed going to taper in November? We don't know. Competing pressures there. To the extent that the Fed doesn't taper, that's positive for the Rand. But perhaps the bigger issue here is the uncertainty. We don't know what the Fed is going to do. All eyes back on the Fed. So volatility in financial markets in the week ahead certainly seems very possible. Now, these two themes, the energy crisis and the Fed, are obviously feeding through into our financial markets. As I mentioned, the Rand came under pressure after the Fed. However, dollar Rand couldn't get through that 15-20 level. We failed there repeatedly. Rand doing relatively well, good export orders, foreigners who've been aggressive sellers of the bonds, easing off from that activity. Dollar Rand, a firm top seems to be there at 15.20. However, dollar Rand didn't really get any downside either. Perhaps we could have hoped the Rand would do better after that weak payrolls figure. So dollar Rand has been failing at 14.80, 14.83. So some type of a floor coming in there. I would argue that that floor is not really as strong as the 15.20 on the top side. I do think possibly with after that weak payroll figure, dollar Rand may be able to edge lower through that 14.80. I think more risk of a break of 14.80 than of the 15.20 of the top side. Just stepping back somewhat, the environment has now changed where exporters should be looking at hedges. And we've come off substantially since that 13.40 low. I really favor exporters looking at the collar type structures, other structures at these type of ranges where the Rand is trading. So Rand close to fair value. It's not as strong as it was. So again, exporters can look at coming into the market. Much tougher environment, as is usually the case for importers. The Rand's now, in my view, starting to trend weaker. So importers will have to come in, hedge against potential Rand weakness. But at a level of around 15, quite tough for importers to come in, perhaps waiting for some pullbacks in the Rand. 14.80, potentially even lower to come and put those hedges in place. The biggest moves, however, have been in the interest rate markets. Very tough environment for anyone who's looking to move from floating interest rate exposure to fixed. Remember, this is the time when a lot of corporates and our clients, other clients, are looking to do this type of activity. We know that we're moving into an interest rate hiking environment, so naturally we're getting a lot of requests from our clients. Again, though, it is a very tough environment. As we got that risk aversion, as we got the Fed tapering, what we've seen is our curve price up substantially. So we're literally now in an environment where the curve is pricing a SARB hike in November and the SARB hiking at each and every single meeting through 2022. So there's a huge amount in the price. So understandably, clients want to be looking to hedge their interest rate exposure, but it's a very expensive environment in which to do that. We've seen that sharp upward move in our FRA rates, and similarly, the sharp upward move in our swap rates on the longer dated end of the curve. We're also seeing clients approaching us about energy hedging, so diesel, bunker fuel, etc. Again, there the problem is the fuel prices have already elevated, so oil up at 83. Yes, we're hearing all this talk in the market about possible moves in oil to 90, oil even above 100, but the elevated oil price is already, it's making a difficult discussion with clients about hedging those fuel needs. In terms of the week ahead, the theme is all about inflation, so the US inflation print. US inflation has been running at 5.3% this week, looking at energy costs, looking at any other indicators that are going to tell us where inflation are going. Again, that's coming back to the entire Fed debate. Overall, a lot of uncertainty, a lot for treasurers and people in the financial markets to absorb, volatility to continue in the rand, very elevated interest rates, perhaps that those can pull back this week, give our clients a better opportunity for entry. Good luck for the week ahead.